What's going on, everyone? Let's talk about tax write-off or tax deduction and business write-off.
So what is a tax deduction? It is an amount that will reduce your taxable income. So let's go.
As a business owner, what are you able to deduct as expenses? The IRS Code Section 162 allows a deduction for all of the ordinary and necessary expenses paid or incurred during the taxable year in carrying on any trade or business.
What can you write off for a business and what you cannot write off from a business? Now, here's the thing. A lot of people on the internet are saying things that they should not say that it's a business write-off. And
That's a write-off.
That's a write-off?
Yeah.
Do you even know what a write-off is?
Yeah. It's when you buy something for your business and the government pays you back for it.
here's some of the things I'm going to tell you right now. I own a business for 7-8 years. My family been doing business a long time. And I see people make a lot of mistakes on these businesses, especially during these tax write-offs. Here's a story I got to tell you about a guy that went and bought a jet ski and said it was a business write-off. Now, I don't know what type of business he had or anything else like that. I just know he purchased it and told me it was a business write-off. And he got audited by the IRS and he had to pay thousands of dollars in a fine. And now he's being audited for 7 straight years where they come and look at his books. And he told me that was one of the worst mistakes he has ever made. And here's the thing. Not everything is a business write-off. And this is what you need to understand about business. Right now, people keep saying, oh, if I go to dinner, it's a business write-off. No, it's not always a business write-off. If it's official duty for your business, yes, you can write it off, but only for a certain percentage. But at the end of the day, you need to understand that not everything is a business write-off. And I don't want you to fall for this stuff. So let's get into this. What is a business write-off and what can you claim for a business write-off?
You can buy like nice watches as an example, and as long as they're consistently in your content, you get to write it off.
I don't know what he's saying there, because then he drops this caveat. You got to follow the rules. Here's the rules. You're not going to write off a luxury watch just because you put it in a YouTube video, unless your YouTube channel is about reviewing watches and the YouTube channel actually makes money from people watching it, or maybe you sell watches. But remember, to write off any expense in your business, it must be an expense that is necessary and ordinary to create income in your business. If it's just a cool luxury watch that you want to wear, the only thing it does is tell time, you're not going to be able to expense it.
So at the end of the day, a business write-off is considered what is a business write-off or business tax deduction? So a tax deduction is reduces your taxable income, which means you pay less in taxes. So here's an example. Your business earned $100,000 and a year at gross wise, and you have $30,000 of deductible expenses. So you're only paying taxes on $70,000, not the full amount. So the IRS deem business expenses must be ordinary and necessary. You hear that word? Ordinary and necessary to be deducted. So you need to make sure you understand that. So let's break down what you can and cannot write off so that you stop overpaying and start saving. So home office deduction, you can do this, but did you also know you had to have a dedicated workspace? You have to make sure you mark that this is only an office.
Whether you have a small business, a big business, a side hustle, a rental property, you should be taking a home office deduction if you have an area in the home you use exclusively for your business.
This is not for personal use. Just like I have my garage. I only use it for business purpose, but I don't write it off because I don't want to deem too greedy, because the common mistake is trying to deduct your entire rent or mortgage. And that's a big no-no for the IRS. And you have to make it seem legitimate. Now, let's say you do buy a house and you become a streamer house. Yes, that is a possibility that you can write it off, but you have to talk to a tax professional because there's certain stipulations you need to follow and guidelines, and you don't want to get caught in trouble. Number two is a business travel expense. Yes, you can write off that trip if it's legit. What makes it qualify for?
Now, we can't talk about tax write-offs for businesses without talking about travel. Travel is something that you will most likely be doing for your business, and so you need to know the rules around how to take those deductions. So if you are traveling for business, which means you're leaving your regular zone of operation to conduct business, then you can write off the travel expenses related to that. So that could be rental cars, that could be plane tickets, Airbnbs, parking garage fees, Ubers, all these different things that are related to your travel, as long as you're traveling out of your usual zone of operation for business purpose.
You have to have business related. You're meeting clients, you conferences, you visit sites that's related to your work. You can't write off the spouse ticket unless they work for the company, and meals are deducted 50%. Yes, a steakhouse dinner counts if it's work related. So you have to make sure you understand this. Keep detailed record of your travel expense. The IRS love to ask for proof, and that's the big thing. Another big thing you should be able to write off is payroll and contract payments because your team is tax deductible. So what's deductible is the employee salary and wages, payroll taxes like Social Security, Medicare, and unemployment, independent contract, that's your 1099 workers, and employee benefit and health insurance. Now, if you're making over $50K in profit, which from an LLC, now you should switch from an LLC to an S Corp could save you $1,000 self-employment taxes. So that's where you can get a clear understanding what you should do. Now, number 4, what you can write off is marketing and advertising because growth costs money. So if you have common marketing deduction is Facebook, Google, Instagram ad, website development and hosting, business card flyers, branding costs, influencer partnership, and sponsorship. So yes, you can write off those type of things, but be careful because some of those can get you in trouble. Now, business meals, yes, you can, but there's a rule to it. And you don't want to get caught up in this because it can get you in some trouble. Business meals are 50% deductible, but only if it's actually business related. What is deductible? Meals with your clients, partners, and employees, where you discuss business. Catering meals for employee training or company events is 100% deductible. That's when you cater. Now, what's not deductible? The coffee you run for yourself. That's not deductible. The lunch at your desk. Unless it's a business meeting, it's not deductible. And here's the thing. The IRS love to ask for documentation and proof. Sometimes they even will ask who was there, what were you doing, and why. So now, those are some of the things you can write off. What not to deduct. You can't write off that beach trip. Some things don't qualify as business expense, such as going on a vacation unless you have a getaway with your employee that now you might be able to write off, but always talk to a tax strategist or a tax professional because you don't want to get caught up in this. And not deductible is personal expenses. So if it's directly tied to your business, it's not deductible. And what do I really mean by if it's not dealing with your business, it's not deductible. It doesn't matter. Hobby business. If your business loses money year after year, the IRS may classify it as a hobby, which means it's not a tax break. So if you're losing money every single year, they're going to be like, hey, this is a hobby. It's not a business. So you need to understand that. Political contribution. That means if you go and support a campaign, that campaign donations aren't tax deductible. So golden rule, if an expense isn't necessary for your business, the IRS won't let you deduct it. And that's what you need to do. So what do I do to make sure I'm on the right track. So how I properly track my expenses. And this will save you thousands of dollars. I use QuickBooks. Now, this is not a sponsored by QuickBooks, but I've been using QuickBooks. I store all my digital receipts, my copies, and I have all these expenses in there. And I separate my business and my personal account. Trust me, it makes taxes way easier. Now, the other thing I do is I go to a CPA. They review my finance and flag any potential deduction. And it saves me a lot of money and helps me categorize my expenses so there's nothing misses. And I create a strategy to lower my overall liability. Yes, I talk to a professional about this. I have QuickBooks so I can keep it tracked, and I have separate business accounts. So I don't go having issues. So my final thought is you don't want to leave money on the table, and you also don't want to go to jail or get hit with a tax fine, because at the end of the day, the government will find you out eventually, and they will ask for proof. I know a lot of people that been in business for 8 years, 9 years, and the IRS will come in with a 7 years worth of your taxes until you go through all 7 years, so that they can get a return. And they will charge you for this stuff. And then you're going to be losing money. And this is where I want to make sure you don't make these same mistakes. So at the end of the day, don't make these mistakes. Now, there's a lot more tax deduction you can do. But at the end of the day, tax write-off is good. But here are some examples of what you can do, just so you don't get confused. Number one example is self-employed professional save on taxes. So I'm a freelancer and I do a consultant as a business on the side. I earn $80,000 a year in this example. Now, after I bought my equipment, my software, my home office, and travel, that's my business expense for that year. That's $20,000 of business expense I had. This reduced my taxable income from $80,000 to $60,000, and that will put me about a 22% tax rate. And that saves me about $4,400 in federal taxes. Now, that means I get to keep $4,400 instead of paying that to the IRS. And this is a clear win for me, legitimately writing off. So that's for like self-employment for my consultant business. So I made $80,000 from all of it, but it cost me $20,000 due to computers, due to driving, software I need to do my consultant, my home offices, and my travel expenses. All those are legitimate business write-off. Now, let's go into number 2 example, homeowner itemized deduction. So let's say I'm married and we bought a house and I pay a $8,000 mortgage interest a year. So, and $7,000 of that is property taxes. Now, let's say I also donate $3,000 to charity, and that's total of $18,000 a year tax write-off. At a 22% tax rate, those deductions save me about $3,960 in taxes. So, yes, you can do your mortgage interest because this is a homeowner itemized deduction. At a 22% tax rate, I save about $3,960. So yes, I can do this. But what did I do? My mortgage interest rate, that's legitimate. My property taxes, that's legitimate. And donation, but to a charity. And I had to have proof for that $3,000 donation. That gives me an $18,000 tax deduction that will save me some money. So let's give you an example of a small business loss carry forward. So let's say I started my business consultant of XYZ. And I have $500,000 in revenue that year. But after the deduction, it cost me $600,000 in deduction, resulting in a negative $100,000 net operational loss. That means it owed no income taxes that year. Yes, some business have this issue. I had a business that's like this, so I can carry over $100,000 for the next year or future years for the outcome. So this is a write-off. Let the company invest aggressively and grow without immediate tax hit. So that's a legitimate carry over. I had $600,000 of tax, or I had $600,000 of deductible and $500,000 of income coming in. And this happens a lot when you're trying to grow a company, so you can carry that over. Now, let's talk about when a write-off goes wrong, since I gave you an example of some that you can do. So, a consulting business bought a SUV for $8,000, but she used the vehicle for mostly personal driving. She attempted to write off the entire cost as a business expense. And the IRS only allows 30% of SUV costs match their business use. This is disallowed the rest. So the outcome is they had to pay back taxes and penalty apportioned to the inappropriately deduction. This costs less than is mixing business and personal write-off. And here's the thing. A lot of people do this. And this is why I said you need to keep your business vehicle and personal vehicle separate. If you do them together, you're going to have to write off how many miles you use for business and how many miles you write personal. And you can't write off the whole $80,000 SUV because not the whole time it's used for business. So at the end of the day, don't do this. And I see a lot of people do this wrong. So yes, you can write off your vehicle, but it has to be 100% business use. If it's not, then don't do it, and do it proportionally to what you really used it for. And that's all I got for you. Like and subscribe to my video, and please don't fall for these mistakes or it's going to cost you big.